Thank you for joining us in today's edition of Business Incorporated. I am Bolaji Akinwale. Today on the program, EU fines 3 banks on allegation of interest rate manipulation. Debate over Brexit continues, plus Gabon and China strengthen trade relations. Okay, let's begin with the European Commission wielding its big stick against 3 banks in Belgium on allegation of manipulating a benchmark interest rate. The fine, totaling 485 million euros, is expected to be paid by the banks for breaching the antitrust rules.
On Wednesday that it's fining JP Morgan Chase, HSBC and Credit Agricole a total of 485 million euros, that's about $520 million for colluding to manipulate a benchmark interest rate. According to the Commission's investigation, traders of the 3 banks have been exchanging confidential information and colluding on euro interest rate derivative pricing, destroying the fairness of the benchmark euro interbank offered rate, Euribor. The banks will be fined for breaching the antitrust rules, with JP Morgan to pay 337.2 million euros, Credit Agricole 114.6 million euros, and HSBC 33.6 million euros.
Today's final decision sends a clear message. Banks, like all companies, have to respect EU competition rules. And financial markets need to be competitive. The financial product concerned by this cartel, euro interest rate derivatives, are highly important not only for banks, but for many businesses throughout Europe.
Vestager also said that she hopes the penalty puts an end to this case, but the European Commission will conduct investigations and take actions with no hesitation if similar cases happen again. In 2013, 4 other banks, Barclays, Deutsche Bank, Royal Bank of Scotland and Societe Generale, were also fined by the Commission for the same reason. However, the 3 banks have refused to accept the penalty and expressed intentions to appeal.
Meanwhile, shares in Europe were higher in morning trade on Thursday as investors awaited an announcement from President Mario Draghi of the European Central Bank on further monetary stimulus. Now let's bring in Olaf Krieger, the DWTV financial correspondent, as he joins us from the Frankfurt Stock Exchange. Olaf, it's great to have you on the program. But first of all, we're going to talk about the EU announcing that JP Morgan Chase, HSBC and Credit Agricole are fined a total of 485 million euros for colluding to manipulate a benchmark interest rate. How are investors reacting to this news?
Well, I'm afraid I have to say that didn't even recognize it, because compared to the earning figures such huge banks year for year presented, this mini fine is nothing. And the trouble is, and traders and investors pointed it out, that it's very difficult, if not impossible, to control those transactions. They were operated in so-called chat rooms, and it needs only seconds to transfer billions around the globe with any control, until now.
Now, the ECB Governing Council meets today for the final time in 2016. The highlight of the meeting is expected to be an extension of quantitative easing program. Now, will this boost activities at the market?
Well, I'm pretty much convinced that the decision of ECB President Mario Draghi will boost the market here in Frankfurt and elsewhere in Europe, and many economists are quite convinced that Mario Draghi is going to extend the massive bond buying program to stimulate the different economies in the Eurozone, which we know a lot of them are still on shaky legs, like Italy, and it needs some more support coming from the ECB, and investors are pretty much convinced that Mario Draghi is going to take some more action again to bring more stability into the Eurozone and bring more stability, of course, for the single currency, for the euro.
Now, China's November exports rose 0.1% year-on-year, dollar-denominated basis, now reversing October's 7.3% decline. Now, imports also grew at the fastest pace since September of 2014. What signals are these set of data sending to the markets?
Well, let me put it this way. It's a kind of sign of hope because, as we all know, the Chinese economy is in hot water since a very long period of time, and compared to those figures we saw over decades coming from China, this is not that much, but it means that the Chinese economy is going to recover very slowly, but we can clearly see that's even tremendously important for European companies, for European economy as a whole, because China is one of the most important markets in the world, especially, of course, for German companies, for German car makers, German machinery, because they are going to sell a lot of products over to China. So this is a slightly sign of a hope that the Chinese economy is going to recover.
Thank you so much for your insight, Olaf Krieger, DWTV financial correspondent reporting from Frankfurt. Still, from the markets in Asia, the numbers rose after major U.S. indexes had a banner session to hit record highs overnight ahead of the European Central Bank's latest interest rate decision for the year. In Australia, the ASX 200 closed up 1.2%, with its materials sub-index up 1.4% and the financials sub-index up 1.69%. Australia reported trade balance data for October with a deficit of 1.54 billion Australian dollars, that is 1.2 billion US dollars, wider than the $800 million Australian dollars gap forecast. In Japan, the benchmark Nikkei 225 rose to its highest levels this year, closing up 1.45% at 18,765.47. Chinese shares were lower, with the Shanghai Composite lower at 0.2%, and the Shenzhen Composite finished off 0.62% at 2,077.37. Now, debates over the